A huge drop on the Dow today. The index posted a 500-point loss at the close of markets, pretty much knocking out all the gains made for this year.
And that's just one day in a string of losses. In fact, the Dow has lost more than 1,000 points over the past 2 weeks alone. Good evening, everyone. I'm Scott Levin.
And I'm Mary Alice Demler. Some financial advisors that Chew on Your Side's Michael Wooten spoke with tonight say this could mean different things depending on your own financial situation.
By the time the closing bell rang, the Dow had its biggest one-day drop since late 2008. So what's to blame and what's the takeaway for regular folks?
I think we're looking at fear.
It's very concerning.
It's not nice to see, but we're still higher than we had money a year ago.
We spoke with 3 local financial experts to get their take. We'll start with Joe Curatola, who acknowledges the bad news but questions the severity.
Everybody is up from 12 months ago. Last August to today, they're up, more than likely. Most everybody is about even. If you're conservative, you're probably up for the year. If you're aggressive, you're probably down a little bit for the year.
And Joe points out it's not all bad. Gold remains near an all-time high. We have record low mortgage rates, and oil prices are dropping, down more than $5 today alone.
This year could be similar to last year in the markets, where we had a nice spring. Market fell off about 15%, and then September 1, somebody turned the lights on. The market had a great rally.
But Jay Blanchard with Next Financial sees an uncertain future, especially since Washington barely avoided default and hasn't fully addressed the debt. Add to that high unemployment and overall uncertainty.
This is like a drunken rampage. One beer doesn't make you sick, okay? And this is just a cumulative effect of a big party.
His advice, at least take a closer look at where and how you're investing.
You're allowed to change your mind about risk. A lot of people feel like they get locked in, they can't change their mind. But I took some calls today where we said, okay, great, let's throttle back a little bit. What harm would that do if we did that?
Finally, Tony O'Gorick falls in the middle. He only sees a 20 or 30% chance of a double-dip recession.
It may feel like 2008, but the world really is a fundamentally different place, and I don't think we're going to be seeing a repeat of that.
But some investors should be more concerned than others. If you're 30, your 401k has time, but if you need cash now, today's sell-off hits home.
I think people who need to be careful are ones who have money in the markets and are going to have to liquidate positions over the short term, perhaps over the next year or 18 months, in order to do home repairs, college, whatever the case may be.
And we actually have some breaking news on this topic. The Asian stock markets are now tumbling due to fears that the U.S. may be headed back into recession. Add on to that Europe's debt crisis continuing and getting worse. Japan's market is down 3.5% at this point. Hong Kong is off 4.5%. And Australia's market has already fallen more than 4%. We'll have to see how Wall Street reacts to that coming up tomorrow. Reporting live, Michael Wooten, Channel 2 News Tonight.
Michael, thanks. And into the morning, there are other factors investors will be keeping their eyes on.
Every morning now, we check in to see what's happening in Europe. Are the banks still okay? Has there been any crisis? Has anybody declared insolvency? And until that uncertainty is resolved, it will be tough to pull this back together.
And in addition to the numbers from Europe, unemployment numbers, investors expect weak job numbers for July also. It's something we're going to be keeping a very close eye on throughout tomorrow morning.